Our last guest is senior mortgage banker Glenn Barich, returning again from Bank of England. Good morning.
Good morning. Thanks for having me.
Thanks for being here. Reversed mortgages. We've talked about them a while back, but I need a refresher.
Oh, okay.
So can you tell me and our viewers what a reversed mortgage is, please?
Sure. It was brought on actually by the government to help out seniors that first tried to do the American dream. Buy a home, pay off the mortgage, have a mortgage burning party. They used to do that years ago.
Yes.
And then you retire and you have a home that's paid off. And then they found out that maybe their expenses are a lot more, maybe insurance is a lot more, medications, and the income maybe was not what they thought it was going to be. So you have a home that has a lot of equity in it and they're having a hard time surviving. Okay. So the program was brought on to maybe give them some money every month to help out with extra expenses, some extra income. Whether they have a mortgage on it or whether it's free and clear, they try to give them some money to help out with their monthly.
Okay. So you can get a reversed mortgage even if you have an existing mortgage?
Yeah, so what happens is they kind of get let's say it's a $200,000 home.
Right.
Depending on their age, they're going to get anywhere from, say, $80,000 to $120,000 available. If they have a mortgage, let's say we're going to give them, based on their age, they qualify for a $110,000 reverse mortgage. If they have a mortgage that's, say, $50,000 still remaining, we'll pay off that $50,000. Get rid of that.
Okay.
So to get rid of that payment, first of all. So if that's a $300 a month payment, that's sort of like an extra raise to them. And then the other money that's left over, another $60,000, would be a line of credit. And they can get a little monthly income, or they can use it as sort of those emergency expenses. We need a new air conditioner, need a roof, a new car. They can use it for any expenses, or take that trip they always wanted to go to Hawaii.
Right.
They can use it for that as well.
And how young or old do you have to be to qualify? So
it starts at 62 years old. So at least one, if it's a married couple, one has to be 62. The other can be younger. But now, years ago, you just had to sort of fog the mirror to qualify. If you were 62, you qualified to get a reverse. Then they found there were some problems going on with that some people still didn't have enough money to pay their taxes, the property taxes, or pay for their insurance. Because maybe they only had $800 of Social Security coming in. So now there's some qualifications to make sure that there's going to be enough money to pay their taxes and insurance for them. So there's a little bit more qualification where there wasn't at first with the program, but they're shoring it up to make sure it's going to last a long time and help out more people.
Okay. Now, how does debt figure into this? So if you have other bills, say other than your mortgage payments, is that figured into the equation as well?
To some degree. So like a regular mortgage, you always talk about your debt ratios, and so in this case there's no payment, so you don't have to qualify for that payment, but they do want to make sure you have enough money to pay your car, if you have a car loan still, pay your taxes, property taxes, pay your insurance. So they want to make sure that you have enough to do that. If you don't have enough, they're going to set aside some of that home equity, that line of credit, so that we can pay the taxes and pay your insurance for you, so that you're not stuck at the end of the year.
Okay. Are there other misconceptions that you've heard people ask you about reverse mortgages that you can tell us about?
Oh, there's a pile of them, and that's
we
disappointing.
only have a couple minutes
I'm
left.
trying to educate the community because there's a lot of misconceptions.
Absolutely.
So first big thing is people think we're going to take the house. We don't take the house. We just put a new lien on the property. So whatever someone takes as advances, that accrues some interest, and they have to pay back what's been advanced plus the interest. That's it. So a lot of people get a reverse mortgage. Maybe they move in 5 years, they sell, they pay off what they owe, take the remaining equity proceeds, and go buy another property.
Okay. So you're not going to kick them out of their homes at any point?
No.
Okay. Anything else that you'd like to add? I know that there was a lot that we had talked about before you came on, so any final thoughts to share with our viewers?
Well, if they want to find out some more information, you can actually buy with a reverse mortgage. So a lot of people are buying, and basically it's, put about half down on a home and never have a mortgage payment. So conserve the other cash to go play golf, enjoy the rest of their retirement. So that's a neat thing that a lot of people don't know about. So if they want to know
so they
about
should come and talk to you.
Yes.
Okay, and where can they do that?
I'm here in town, right here in Sarasota, so they can. We have an office right on Orange and Fruitville. They can come meet with me there. And if they want to check out our website, it's boeflorida.com.
Okay, wonderful. Well, thank you again for being here. Nice to see you. Thank you for tuning in to this week's episode of Suncoast FYI. We will return after a short break.